Awesome. Now, a lot of the times, most traders don't realize that there's basically nothing wrong with their strategy. The only problem they have is their understanding of the market structure because this is the
Oi.
foundation. This is literally the most important thing in trading. Because if you don't understand market structure, you're literally already gonna fail in trading. All you're gonna do is just run around the circle. Today you're buying, tomorrow you're selling, and you're not gonna understand the reason why you keep getting wiped out. Now, this is just my personal opinion. I believe that a lot of these strategies out there, they do work, but the support, resistance, trend line, they do work. But for it to work for you, you need to understand what direction that market is going. For example, if you were a trader and you traded the support and resistance, you would have called this level here. This would have been your resistance level here. You would have called it resistance level. Now, can you notice that price came there first time, rejected, came there here, rejected, rejected, and eventually came there, used that same area as support. That is to show you that those supports and the resistance levels, they actually do work. Let's look at another example. If you actually trade with trend lines, this is a trend line. If you are using the trend line, you can see that the market was literally respecting that trend line and going to the downside. Now, I don't trade support and resistance. I don't trade trend lines. But what I'm trying to make you understand is that a lot of all these other strategies actually work. The only thing you need to do is to dial in and understand the foundation in trading, which is market structure. Once you understand the foundation, which is market structure, every other thing aligns and works in your favor. Because when you now see that this market structure, in this case, you can see that this market structure here on the short-term perspective, you can see that short you can see that short term, this market wants to go to the downside. Short term, why would you say it wants to go to the downside? Maybe you've seen a higher time frame break of structure to the downside. Maybe you've seen maybe a monthly, a weekly, or a daily. In this case, you can see on the monthly time frame, and you can see that the monthly time frame will have a break of structure to the downside. So you can simply use inefficiencies to support that idea for the sell bias on the short-term perspective. And the market going to the upside, you can look for sell opportunities, short-term sell opportunities, and you can see how prices respecting those areas and going to the downside. Now, for me personally, before I look at any pair that I want to trade, the first thing I want to know is what is the 12-month time frame telling me? Is it showing me bullish or is it bearish bias? If the 12-month time frame is bullish, that means long-term perspective, I'm going to be looking for buy opportunities. Now, it doesn't mean that I can never take a sell. There's going to be opportunities where you will have to counter trend and trade against the trend. Example, you can see that right here from 1980 until 1985, for 5 years, the market was trending to the downside. So that means I'm not going to be looking for buys within those 5 years interval. I'll be looking for sell opportunities on the intraday levels. I'll be looking for a significant daily break of structure to the downside to confirm that mega trade to the downside. And then I'll be looking for inefficiencies on the higher time frame, whether it's the monthly, the weekly, the daily, or even the 4 hour time frame. I'll use those time frame points of interest and look for sell opportunities. Now, I try not to go down to 1 hour to use that as a point of interest unless it's for a day trade or for a scalp trade. But if I'm looking for a swing trade opportunity or just for a continuation trend, I usually prefer using the higher time frame point of interest. Now, another example you can basically see right here, after we had this impulse move to the upside, showing intention that the market structure is bullish, it wants to continue higher. We're using our point of interest, which is right here. And this is the area price came down into and used it as support. And then we can see that the market since then, it's been going to the upside. Now, after I've derived my key level, what I'm waiting for price to do is to come into that position and for the market structure to shift from bearish to bullish. In this case, you can basically see that as much as we are bullish on the long-term perspective, you can see that On the monthly time frame, this market is literally trending to the downside on the monthly time frame. Now, some traders, this is why I always recommend starting your analysis from the 12 month, because a lot of the time, the mistake a lot of traders make is they start the analysis on the monthly without realizing that there's way more things that are going on in the market besides just on the monthly. And if you use the monthly, you can actually think that we're still bearish. And what are you going to do? You're going to be using this inefficiency here as your point of interest, and you're going to be selling. And what do you think eventually is going to happen to that trade? Your stop loss is going to get hit, because what the market does is whether you're looking for a buy or a sell, the market will give you an opportunity, whether it's a buy or a sell. Now, this inefficiency here is for sells. Traders are going to be using it to sell. Some of them will be using this with the intention that we will continue to the downside without realizing that any sell you are catching from here should be a short-term sell, and then look for a long-term buy to continue higher. Using that 12 months time frame, giving you a signal that we are bullish and we have hit that extreme level, and we've hit a 12-month point of interest that could be a catalyst for a reversal for us to continue higher. And we could literally go into multi-year bullish bias and bullishness of price going to the upside. Now, now you've derived that the 12 month is bullish. All you're looking for is for the lower time frames to start aligning with that 12-month bullish bias. And what do I mean by that? 12 months is bullish, price coming down into this extreme level. You're looking for the daily. The daily is literally one of the most important time frame shift in market structure that you want to see when you are anticipating for a trend shift. If you're anticipating for the trend to go from bearish to bullish, you need to see the daily time frame break of structure for confirmation. Now, before the daily breaks, there's going to be 1 second break, 1 minute break, 1 hour break, 4 hour break. But the moment you see that daily break, that's your confirmation that the trend has potentially shifted from whether it's bearish to bullish or whether it's bullish to bearish. An example right here, you can see that monthly, we've literally been trending to the downside until we came into this extreme level. And after we came into that position, we took liquidity. And right here, there was a previous lower high. The market was literally trending to the downside here, broke this structure. We came back here for a retest. And after that retest, you can see right here, we rallied to the upside. Now, this is our monthly swing high and then monthly low. Now, if you go into this price action, now this is where the structure shifted here. This price action here was only a retest. This was only a retest. This was where we saw the shift in market structure. And that shift in market structure literally happened in 2002. That's when the shift in market structure happened. And price came back for a retest in 2022. Literally 20 years. It came back 20 years later for a retest. That is to show you that the algorithm does not forget. We traders are the ones that do forget. We forget price action due to our personal engagements. But the algorithm is already designed to do specific things at specific time intervals. Now, you can basically see that when price came down into this extreme level, what are we looking for? We're looking for that significant daily break of structure to confirm that trend shift. And right here is the daily break of structure. The moment you see a daily break of structure, even if it's for a counter trend opportunity or for a pro trend, that is the market giving you a telltale sign that it wants to go towards that direction, whether it's for the long term or the short term, but it's already giving you signals that it wants to go to the upside. I'll show you multiple examples of that. This is an example for buyers, for buy bias. Right here, this was an example for buys. And if you go to, now this is USD card. And you can see that on USD card as well. You can see right here, this was the low, and this was the break of structure on the daily time frame. This is the daily low that created a daily high, and then this is a daily break of structure. Price coming up here for a retest. Look what happened afterwards. We went to the downside. Now, look at what happened here as well. We were trending to the downside, and then look what happened here. We created a high, a low, a high, this low, this high, a low, and then right here, this is not a break of structure. And the reason I say this is not a break of structure here is simply because the reason I say this is not a break of structure is simply because there wasn't a candle closure. The break of structure only happened right here. So this is a complex break of structure. The break of structure happened here. And after we saw this break, this candle closing above that position, we just want to see a retest for this to go to the upside. On the short-term perspective, this is not long-term. This is short-term. And what I'm trying to show you is when you see those daily breaks of structures, it can be giving you signs that price wants to go to a specific direction. So you can take advantage of that, even if it's for a short-term perspective or long-term perspective. In this case, this is short-term perspective because long-term I'm bearish on USD card. But on the short term, this break of structure here is giving us telltale sign price wants to run liquidity before that
Question.
confirmation. Yeah, ask your question.
Where you said it's not a break of structure, can we zoom in and like evaluate it? Yeah,
So
there.
right here, this is the area.
Mm-hmm.
And can you see that this candle didn't close above?
Yeah, yeah.
And this one closed. But the
Mm-hmm.
reason why I wouldn't regard this as a break is because you want to see a bullish candle close, not a bearish candle. If the
Oh,
bearish candle closed above, it's still not a break of structure until you see a bullish candle close
oh,
above. The same
yeah.
goes for vice versa. Let's say you're looking for a break to the downside, and then you've not seen any bearish candle close below that low. It's not a break of structure until you see a bearish candle. If you see a bullish candle close below that low, it is not a break of structure until you see a bearish candle close below that low. Does that make sense?
Yeah, a lot of sense. Yeah, thank you.
No worries. Now you can see that in as much as we're still bearish on the long-term perspective, that daily break of structure that happened right here has led us to continue higher, to target this high, which is liquidity, buy side liquidity. Right here, we have buy side liquidity, and this is our overall sell side liquidity. And what I'm anticipating for this is for a run on buy side, then if I see a shift in market structure on the lower time frame, I will look for sells. For what? For a run on sell side. But we'll get into this on another session. Don't want to confuse some of you that are a little bit relatively new. So now this is to show you the effects of those daily time frame breaks of structures, whether it is for a continuation trend or it's for a counter trend. In both ways, they are always something to always look out for. Because if you're not paying attention to those daily breaks of structures, that is when you will be selling when you should be buying or buying when you should be selling. So this is a beautiful example for daily break of structure. And I also call it daily break of structure. I also call it the mega trade. So when I see a daily break of structure, I also call it a mega trade. Now, it's not just the daily break of structure, it's also the weekly and the monthly. If I see a monthly break of structure or the weekly break of structure, it's a mega trade. Another typical example of those higher time frame breaks of structures is so let me use a fresh chart to show this. Another typical example using Ethereum. Um, Now, right here, you can see this is just an example. You can see that on the long-term perspective, Ethereum is bullish. So I need the charts that shows all the price actions. So right here, you can see that on the long-term perspective, you can see that Ethereum is bullish, consistently creating higher highs, higher low, a higher high, a higher low, and this higher high, higher low. So all I'm anticipating to see from Ethereum is for it to create another higher high. And this right here, we're currently on the monthly. And if you do the same thing on 12-month time frame or 6-month time frame, you can see that it's still going to show you that Ethereum is long-term bullish. Now, the mistake we traders make sometimes is we focus too much on the lower time frame market structure. Now, I'm not saying there's anything wrong with that, but you need to know when you have to go to the bigger time frame to understand the direction, and then you can go to the lower time frame to trade intraday. Know the difference. If you don't know the difference, you're always going to get wiped out. You could be looking for buys when you should be looking for sells. A typical example is you can look at this right now. This is Ethereum, and right here on the daily time frame, what do we have right here? You can see that on the daily, Ethereum created a high, created a low, created a high, and then created this low down here. And this is a clean break of structure. What are traders going to be looking for? Sells. Without understanding that it is not every time you see those daily or 4 hour or 1 hour break of structure that you should be trading a reversal. Because when you go to the weekly, you can basically see that that was just a run on liquidity. There was no break of structure to the downside. And the market literally just came to mitigate an inefficiency. And what are we going to be expecting from this price action? A continuation. So that means our focus should be on looking for time frame break of structure, whether it's 4 hour break or 1 hour break, to use that as an entry. And right here, this is 4 hour time frame, and you can see that 4 hour time frame, there was already a break of structure here. And if you go to 8 hour time frame as well, you can see that on the 8 hour time frame, there's a break of structure there. And when you go to the monthly time frame, when you go to the monthly time frame, you can see right here on the monthly time frame, you can see that the market was trending to the downside, creating these lower highs and lower lows. Let's go to 1 week time frame so you can see this a lot cleaner. You can see that the market was trending to the downside. And right here, we had a break of structure. This is one of the reasons why a lot of people were predicting that Ethereum was going to go to zero, it was going to go to $1 and all sorts. But all the market was doing was coming down into an extreme discount level for accumulation to continue to the upside. And the only way you can know this is if you are very comfortable with using those higher time frames. If you're using those higher time frames to start your analysis, you can see that very clearly. You can see that us coming down here was literally just coming down to mitigate an inefficiency. And if you use the fair value gap, if you use the Fibonacci, which I'll teach in the next session, you can see that we literally came down into an extreme discount level, which is a perfect area for you to accumulate and buy. Now, if you're skeptical, you can wait for your mega trade, which is a daily break of structure, weekly break of structure. Once you see that, you can now start looking for buy opportunities. In this case, you can see this was the weekly break of structure. It happened right here. And if you go down to daily time frame as well, you can see that on the daily time frame, right here, this is daily time frame. This was our daily high right here. And this daily high, you can see we broke structure here. And after we broke that structure, price still came down for a retest. So even if you missed buying it down here, this would have also been a great price to buy. And that would have been around 1,600. And it gave you multiple opportunities, not just one. It came down here again. For some of you that have been in my VIP coaching, I called this price action. I told you guys to buy from here. Some of you that were still with me even after a month, I told you to buy from here. Some of you that were still with me after the next month, I told you to buy from here. And votes, last week we had a session, I told you to buy from here. Did I or did I not?
Yeah, you did.
And this is just having that clean understanding of market structure and how to flow with price. You're not trying to trade against the trend, you're trying to flow. Just let the market come to you. Even when I was telling votes that here is a great area to buy, he was still skeptical about the trade. And what did I tell him? I told him if you're skeptical, just wait for another multiple break of structure. 1 hour, wait for another 1 hour break. True or false?
True.
And look at how it played out. It was as if I knew what the market was going to do. And look
Mhm.
what happened here. The market broke the first structure, and then it came down and it broke another second structure. multiple bricks of structures. This was the first one. He messaged me. He was trying to figure out whether this was the right break or not. And I told him, if you're skeptical, wait for another 1 hour break. And this is the second 1 hour break. We still have the text messages.
Yeah.
And this was the second 1 hour break. And that's a beautiful entry. And look what happened eventually. If you took the trade from there, let's see what the risk to reward would have been like. Stop loss here. Add a few extra pips below. And this is the trade. That's the 1:8.
Yeah,
On
and you still get another entry within.
and it's still giving more entries, and it's still going to give more entries every single week. It can't stop, it won't stop. The question is, will you be able to see the signs before they take off? That is the challenge most traders have. How do you get in? How do you know this is the area to start looking for buys? These are very simple things. You can literally learn how to do them by just understanding the market structure on the higher time frame and how to align it to the lower time frames. Here we have that weekly break of structure. If you're still skeptical that Ethereum will rally and break all-time high, it still came here and broke another weekly high, swing high, confirming that Ethereum is about to take off and blast through the roof. The price action, this is not financial advice, but the price action you all are going to see on Ethereum is nothing you've ever seen before. I'm not telling you to go and buy Ethereum, not financial advice. This is just my opinion. But the price action you all will see on Ethereum is nothing you've seen before. So, bottom line is always remember that no matter what strategy you're trading right now, there's probably nothing wrong with it. The only problem is your understanding of market structure. The moment you understand market structure really well, you will see that your trend line will work, your support and resistance will work. Whatever strategy you're trading, whether it's supply and demand, or whether it's ICT, SMC, SCC, SEC, whatever it is, I don't care. You will see that everything will work as long as you understand market structure. So that's it from me today. I really appreciate every single one of you that tuned in today. You all are rock stars. I appreciate you. I hope this has been helpful. If you have any questions, now will be the perfect time to ask a question.
Yeah. Thank you. Thank you for this.
So does anyone have any questions? Any questions at all?
No, sir. Thank you, sir.
But do you okay. No. It's
Yeah. Say what you want to say, votes.
do you feel like Euro USD will for USD card, I believe we are going to get to that point of interest, but far away, I don't know.
So you're asking me a question that is off the
That's why
spectrum.
that's why
But
I stopped.
but all right. I'll just answer your question anyway. Let's just go to real-time price action. So this is something I want you all to understand. There's a lot of manipulation going on Europe and the currencies. Now, those manipulations, now if you look at this is Euro FX futures, right? And let me show you something. Now, if you look at Euro itself here, this is Euro itself right down here. And let's go to 4 hour time frame. Now, on this 4 hour time frame, you can see that Euro, this is the 4 hour low, right? Look at the
Yeah.
date, the 11th September, and that same low, look at that same low here, 11th September. Can you notice
Hmm.
the difference? This one came down and mitigated the inefficiency.
Yeah.
This one came down and took liquidity.
Hmm.
Now, after this one took liquidity, it broke 4 hour high. You can see that right here. Can you see that break? It's very small,
Yeah.
very slight break.
Yeah.
Most traders won't see this. Now,
Hmm.
Look at this one on Euro FX futures. You can see that there was no break of structure. Can you see that?
Yeah, nothing went above.
Absolutely no break of structure. This is already giving me a telltale sign that there's a manipulation going on here. Now, long term, I still remain bullish on Europe. I'm still anticipating for a continuation on Euro. Now, what I would like to see on Euro to start looking for buys, both on these two pairs. These are literally the same. They are meant to be
Mhm.
the same. It's just because of manipulation on on FX brokers, and then this is in my opinion, this is what the chart was supposed to be like for this FX, but manipulation comes into play on FX brokers, and there's nothing we can do about it. But now, what I'm interested in that will make me look for buys on Euro, I have no interest in selling it. If I don't see a buy opportunity, I'll be on the sidelines and I'll let it do its thing. Now, if I'm looking at this, you can basically see that there was no break to the downside. So price coming down to retest on this 4-hour high, 4-hour low, mitigating here this inefficiency. All I want to see inside this range is either a 15 minutes or 30 minutes BOS, right?
Mhm.
I see that 15 minutes or 30 minutes BOS, I'll start looking for buy opportunities. Now, because this trade is a very tricky trade, I'm not going to be so impulsive to jump into that trade. Already, you can see that we've retested, we've broken a 30 minutes high here, 30 minutes low, break of structure. We came back and retested, right?
Yeah.
That retest, I'm not looking for entries yet. What am I waiting for? I'm looking for multiple breaks on the same time frame. So what I want to see now is another 30 minutes break of structure above this level. Now, if I'm able to see a 30 minutes break of structure here, then I'll start looking for buys. If price should break above here and close, coming down for a retest, I'll be looking for buy opportunities and my stop loss will be this low.
Yeah.
I can look for a higher time frame fair value gap or inefficiency within this zone after I see that break. Once there's a break above, I'll go to like 1 hour, 4 hour, and I'll look for any inefficiency I can see here. If there's any inefficiency on the higher time frame that I can see right there, I'll just outline it and I'll wait inside there for my buy setups. So
Mhm.
for now, there isn't any inefficiency on the 4 hour that I'm seeing. On the 1 hour, I'm not really seeing much, but after this break of structure, maybe there'll be one inefficiency that I can work with. But the most important thing now is to be patient. Now, on the other hand, looking at this price action on FX broker, already we took liquidity from this low. And after we took liquidity, we broke this structure. What do I want to see on this FX? I want to see if this price action really wants to go up. I want to see it break this 4 hour high, multiple 4 hour breaks. Now, can you see how this analysis is actually the same but different?
Yeah.
The same key levels I'm watching for the same break of structure, literally in this time frame is 30 minutes. In this time frame, it's 4 hour, but it's literally the same point of interest because there's already a 4 hour break here. Now, I want to see the second 4 hour break,
Like,
confirm that this market really wants to rip. And then coming down for that retest, I'll look for buys. And it's still the same area. Does that make sense? Does that answer your question,
yeah,
folks?
yeah. Now it's making sense because I was like USD card is so near to the point of interest, and this one is like so far, and I'm like these pairs somehow are related. So how comes this one is so far away from hitting its point of interest? But now it makes sense.
Yeah, it's all manipulation. Like I always say this, your brokers is always out to get you. Your broker don't want you to make no money, like it or not. Everyone is out to get you in this market. But your broker don't want you to make money because if you make money, they have to pay you. Your prop firm, they don't want you to make money. If you make money, they're gonna have to pay you out their pockets. And like I
Mhm.
always say, the trading education companies, they also don't want you to make money because if you're making money, you're not gonna pay for a course. Why would you pay
Yeah.
for the cost if you're making money? Nobody pays for the cost if they're making money. So
Yeah.
that's the reason why you have to always think outside the box. If you want to make money, you have to think outside the box. That's the only way you can succeed. If you're just doing generic thing that every single person is doing, you will see that you'll still be getting the same results that every single person is getting. That's the reason there's a 1%. What makes them different? Because they always think outside the box. They're always thinking, what exactly is going on here that I'm not seeing? That is what I just showed you guys. Something that is going on Euro that you're probably not seeing. So I hope it's been helpful, Vote, and everyone here that's probably might be trading Euro. So
Yeah.
any questions at all? If you have any questions, feel free to just drop the message in the chat. If you enjoyed this session, I absolutely will appreciate it if you can drop a comment what you enjoyed or what you would like me to improve. Just give me your honest feedback. That's what I'm doing this for. I'm doing this to support you all. So I just need you all to tell me your challenges. Let me know what you're struggling with so I can know how to support you all in your journey. So until next time, I'll see you all tomorrow, 7 p.m. Appreciate you and I wish you all a wonderful weekend.
Okay, thank you. Bye.
All right. Take care, everyone.
Thank you, sir.
All right. Thank you,
So
John.
much, Henry.